Thank you very much. So my name is Kenneth Tang, and I work in Amova Asset Management. I believe Shin Xiang actually mentioned that if you want to think of him, you can consider him to be the ETF person in Lion Global. For me, I would consider myself the Singapore equity person in Amova Asset Management. Today, I actually help run the investment team in Amova Asset Management for the Asia ex-Japan strategy. And today I'm very pleased to be here to share with you my story for today, investing in tomorrow's Singapore. One market, multiple opportunities. Maybe as a start, could I just have, by the show of hands, how many of you actually is invested in Singapore equities in one way or format? It could be stocks, can be the ETF, it can be through other funds. Raise your hands. Wow, so few. Okay. So that means I presume the others don't really invest in Singapore equities. Maybe you think that is a bit risky. Maybe you think that is not so suitable for you. Today, I hope to pique your interest. So without further ado, I will just bring you to the order of presentation today. I will talk about Amova Asset Management. Some of you may not know us or be so familiar with us. I will also cover what investing in Singapore tomorrow is all about, and what are the multiple ways we can think about Singapore, because I myself am a proud Singaporean. The third thing is investing through the STI ETFs. There are actually two in Singapore today for the STI. We will share our perspective as Amova STI ETF, and finally some concluding comments. So a quick word on who we are. Now, Amova Asset Management was formerly Nikko Asset Management, which some of you may know. And we are one of Asia's leading asset managers. We run 274 billion in US dollars in terms of assets, and we cover multiple strategies covering global equities, fixed income, multi-assets, and alternative solutions. We believe in sustainability, and it's really embedded in how we practice our investments. But our mission to all investors is to help clients achieve better long-term outcomes through progressive solutions. And today, I'd like to share with you how we can do this together for the investing in the STI. Now, Amova has been a pioneer in Singapore's ETF market. We have been managing ETFs for the past 20 years or 2 decades. Our flagship STI ETF launched in 2009 and has given investors a simple and cost-effective way to really gain exposure into Singapore's best companies. Now, since then, we have expanded our ETF offering. Today, we are not just about the Singapore ETF, but we have ETFs totaling 3 billion Singapore dollars, and we have earned multiple awards as an ETF provider. So we are very proud. We are very excited about Singapore's growth story, and I would just say that this ETF that we manage for the STI remains a core building block for our investments. Now, let me go straight into the presentation that I believe most of you will be quite keen to hear. What is tomorrow's Singapore? Well, if I may just paint the history of Singapore, maybe in the last 1 year, today's Singapore's investment story begins in a world that feels increasingly unpredictable. It's uncertain. Geopolitical tensions are rising, conflicts are flaring, and markets are swinging from fear to euphoria. But yet, amid this global turbulence, Singapore stands out as a calm, steady harbor for investors. And increasingly, people are starting to understand Singapore is a very safe and resilient story. Because why? Beneath all the noise that we see on Bloomberg or CNA, Singapore's economy is actually humming with balance, it's humming with power, and it's driven by what we call a diversified engine of growth. We have finance, trade, tourism, manufacturing. If you look back for the last 1 year, you will notice that we had very uncertain environment with the Trade Liberation Day, the US-Iran conflict. But yet, in the last 4 quarters, GDP growth in Singapore has actually gone from strength to strength. it is actually quite hard to imagine that during this time, Singapore is actually winning. So behind our Singapore economy, you also have a disciplined government, a credible central bank, MAS, which is quietly steering our Singapore ship with good fiscal levers, monetary policy ready for any storm. That's why many of us have so many CDC vouchers, right? So as the world searches for stability, something we need today, Singapore is going from a a haven to become a wealth magnet. Now, what does that mean? Wealth is pouring into Singapore today. Look at the news. We have the most number of billionaires per capita because wealth is coming in, and it's not by accident. It is actually by design. We have infrastructure in Singapore, both hard and soft, that is world-class. Investors recognize it. They sense the resilience. They sense the clarity. And that's why capital just don't arrive in Singapore. It stays, it grows, and it compounds. And the most exciting story for Singapore today is written as we speak. Because the Singapore market, as we know today, is not just about Singapore, but it's also about the new Singapore. So, in Amova Asset Management, we believe we want to look for companies to invest in that is going through this transformation. So we like new Singapore, and we are very excited about the opportunity ahead. You might think to yourself, is that true? Is Singapore so exciting? Maybe you think that I'm exaggerating. So let's take a look at the evidence. Now, I like to look at proof. And you can see that we actually have one of the best stock markets in the world. You don't feel like it, but actually Singapore has been a very good investment destination. For the past 5 years, Singapore has given a very powerful title, the best performing market in the world, beating Asia, beating the US and the world at large. And yesterday, the STI hit a new record all-time high, 5469. You can go and buy that later. But Singapore ranks high in the area of performance. Despite the strong performance of Singapore, you'll be also glad to know that valuations are also attractive. Today, the STI trades at a multiple, which is a valuation tool that we use, of 17.5 times earnings. And that is a meaningful discount compared to the MSCI World, which trades at 24 times, as well as the S&P that trades at 27 times. What this means is that investors like yourself are not overpaying. You are paying a valuation that is not excessive, even though you may have missed the upside for Singapore, because valuations are still attractive. So we have good valuations, good quality companies, and we also have good dividend yields, which I will share later. And because of these attributes, Singapore gives you multiple opportunities to invest as Singapore goes from strength to strength. Now, let me just quickly introduce you to the Amova Singapore STI ETF, which we believe to be one of the most established ETFs in Singapore. Launched in 2009, the STI ETF tracks the 30 largest listed companies in Singapore through one single investment. It uses a full replication approach, meaning it tries to mirror the STI, and we currently manage about 1.5 billion in Sing dollars for this STI ETF. Now, you might wonder, what makes this so attractive for me? Well, it provides you access to Singapore's market leaders across many industries. Think of banking, think of telecommunications, think of transportation, think of property. And all these sectors, rather than you try to pick which one to buy, you can buy it all through one low-cost diversified investment, which is the ETF. And the good news is you look at the ETF today, you will see a number of 4.7%. What is that? That is your dividend yield. So you are paid to wait. Even if you don't see your price go up, you actually do get 4.7% in dividends, which is what the STI offers investors today. We also have a term for ETFs which is called expense ratio. Basically, it's the cost. So the low expense ratio of the STI ETF is at 23 basis points, which is actually one of the lowest in the ETF range in Singapore. So STI gives you a direct way to participate in Singapore's growth story, from rising wealth, financial services, to the service economy. And now let me just bring you to another segment of my presentation, which is talk about New Singapore, right? But before that, if you look at today, what are you getting for the STI? You are getting the positioning in our three very solid and local banks. You are also getting investments into Singapore Telecom, Singapore Exchange, who are here today, as well as many industrial and property companies. But this is what you see from a sector level. What we see as an investor, an institutional investor in Singapore, is something different. This is why we like to talk about New Singapore. Because as I'm a portfolio manager, I like to think of the future of Singapore, the future blue chips of Singapore. And when I look at the STI, it just doesn't represent the sectors that we see today. In fact, if I look at the STI, we believe that it's the wave of new blue chips that will grow into Singapore. They are not just important for Singapore's future, they are also going to play an important role. So today, when we look at New Singapore, we think of energy transition. The world is becoming more green, and we believe companies in the STI can give you the exposure. We think of technology, AI, and that you can also invest through the STI, through the companies. Data, in terms of healthcare, as well as financial services and aviation services, are also multiple ways we can invest. So we think of Singapore as a growth-oriented service economy that you can invest in for your wealth. But it doesn't just stop there. The good news doesn't just stop there. Today, Singapore's secret sauce is also lying in something else. This is called dividends. Do you know that Singapore has one of the highest dividend yields in the world? Not that they perform very well, but even after the performance, Singapore's dividend yield stands high and tall compared to the other global markets. It's more than 4%. And this dividend leadership has risen further. Now, why do I talk so much about dividends? Because there's this thing called compounding. When you invest, you always look for things that compound, means it grows and grows and grows over time. When we look at the STI, you are only seeing a price return. But if you add the dividend of 4 to 5%, over the last 5 years, you would have added close to 40% more in returns. You would have doubled your money in 5 years if you invested in Singapore because of the dividend story, which is very powerful. So I believe that harvesting dividends is the secret sauce of Singapore, very uniquely Singaporean, that we have a dividend yield market that is higher than the rest of this world. Now, one of the things that you may also invest in is this investment called Singapore bonds, or some of you may have invested in T-bills, treasury bills. Well, the sad thing about T-bills is that 2 years ago, they were yielding close to 4%. I was buying T-bills myself, and there was a term called cash was king. Well, that world is changing. Today, Singapore's 3-month government bond rate has fallen from almost 4% to 1.4% today. It's no different for fixed deposits. It's no different for Singapore corporate and government bonds. One of the sharpest declines, which makes it less interesting from a yield point of view. So as income from yield from these instruments shrink, investors need to ask, where is my source of returns going to come from? So the answer is Singapore equities, the Singapore STI, because we still have a dividend yield of more than 4%. We have reasonable valuations as well as exposure to high quality companies. So in short, when Singapore's cash market becomes less attractive, the case of owning Singapore stocks become harder to ignore. So now, if this is a chart that looks confusing to you, let me try to explain. Because this is where the Singapore dividend story becomes very exciting. It's something that we put together to help you understand. Take the dividend yield of Singapore. How much was that? 4%, right? So 4% was about the dividend yield. And how much was the Singapore government bond market? It was 1.5%. So we call this a carry, a spread. So 4 minus 1.5% is 2.5%. We track this number very closely. Why? Because both tends to give you an indication of where the market is going, right? When the spread, for example, the dividend yield now is 2.5%, that means that it is actually higher than bonds. And that's a very powerful proposition. Every time it has taken place, the market hasn't just gone up, it has taken off. In January 2009, when the spread went from 4% to 0, the STI surged 63%. And fast forward to 2020, in a time of COVID, where investing was very difficult, the spread went from 4 to 1%. The STI rallied more than 20%. Last year, Liberation Day, the spread peaked at 3%. Today is at 2.5%. The market has rallied 30%. So if you catch what I'm trying to say is that dividend yields seldom sit meaningfully above its fixed income counterpart. Whenever there is a spread that is attractive, investors will shift more money towards equity at the expense of fixed income, which is why you are paid for carry. So in Singapore, this is the clearest signal that the STI remains relevant and remains attractive. Now, one of the most important things that have happened in my career took place last year, right? I've been working for 30 years covering Singapore equities, but if I were to say last year was a watershed year for Singapore, not just because the market did very well, but we had this thing called EQDP. You may have heard of it, read about it, but what is it exactly? It's called the Equity Market Development Program. Think of it as a significant way that the government is trying to revitalize the Singapore market. It has a funding pool of 6.5 billion. So the program has several objectives. I give you 5. The first objective is to improve market liquidity, to help liquidity improve in the Singapore SGX. The second objective is to attract investors like yourself. Participation where people get more education, learn more about Singapore. The third thing is to channel capital to small mid-cap companies. Many of you here may be business owners, but these small cap companies have been languishing in Singapore. Today, the government is trying to help showcase some of these small mid-caps to investors like ourselves. Fourthly, strengthen the asset management companies. People like Lion, Global, Amova, JP Morgan. We are also strengthening the Singapore ecosystem. Finally, this term called Value Up. It's a corporate initiative that helps to unlock shareholder value. So you can see when MAS launched this EQDP program, they were very strategic. They knew they wanted to get all these milestones hit. And the good news is that it all comes down to the STI. This is not just a policy announcement today. There has been also what we call an award disbursement. It's like collect presentation, right? We have been applying for investing in EQDP. So 3.9 billion has been given to fund managers. Another 1.1 billion will be announced fairly soon. And another 1.5 billion has been upsized almost recently in the earlier part of this year. The takeaway is now Singapore, if you recall, what did I share in the last 15, 20 minutes? We have good valuations. We trade not excessively, correct? Second thing, we have a good growth story. We have modern new Singapore with financial services, transportation, healthcare, data, logistics. And now we have also a dividend yield component. One of the few markets that have dividend yield trading higher than your government bond yield, a rarity. And lastly, but not least, we have EQDP, a powerful catalyst for the stock market. So when new capital enters the market, liquidity will improve, investors will broaden and go beyond the large cap stocks. So we like to think of New Singapore at a time where we're going to have greater liquidity, greater price discovery, greater participation from everyone, and potentially higher valuations where everybody invests and invests well in the Singapore market as well. So in short, EQDP is a very meaningful development in Singapore. In fact, it's the most important development that has taken place in the many years that I've managed money. So I will just leave you with some interesting snippets. So I shared that I have done this for a long time. I joined from school in 1996, so this marks my 30th year. And I remembered the days in the 90s, you might remember as well, and the early 2000s that we had a thriving bull market. Those days, everybody will look at the teletext and look at, there was no iPhones then. It was more like the very traditional way of media. But those days, stocks were hot, right? Stocks were very exciting. And then in 2000, where I really cemented my career, we had another very strong market. And in all these episodes, the stock market was a very important part of everyone's investment. Interestingly, the ETS was not available. So today, when I look back, I do find very strong similarities that we are entering into a similar strong market for Singapore, which has just started. The question is, how long more do we have? I feel, given my sharing, that it is not the end, and there's more to come, and I've given the reasons why I believe so. So when I just go to my final slide, I just hope investors like yourselves will take away a few things. Today, we believe in the Singapore story. We are very proud to be in Singapore. We are very blessed, and the Singapore equity market is a function of reflecting that resilience, the attractiveness, and on top of that, we have good valuations. So we are also quite attractive in valuation terms. Secondly, we think there's a very strong growth narrative going forward. We think that the blue chip companies in Singapore are going to grow and to become world beaters as well, because we believe they are very strong in the area called modern services. Finally, dividend yield matters. High dividend yields is very attractive in Singapore and makes an investment case that's very unique to Singapore. And last but not least, we are entering a time where EQDP is going to help catalyze the market. It is not over. A lot of people look at deployment, but I tell them that it is just the beginning, not the end, because there's more to come. So we believe that is going to continue to stir interest in the Singapore market. So I will just end with one final comment. The past decade could be about waiting for Singapore to be rediscovered. This decade will be living and participating in its revival. Thank you very much for the time. Appreciate the interest in Singapore.